This is the seasonal stock and ETF report for today, November 9th, day after the midterm elections. Like we've done last few days, let's first take a look at the state of S&P 500. I am going to click this opportunity. This opportunity is from today until June 7th. It didn't work last year in 2021, but it worked the previous 9 out of 10 years. How did this work last 20 years? It failed in 2007 and 2009. It was profitable 17 out of last 20 years, or 85% of the years. What if we let's go to 90 years, so a round number. In the last 90 years, this has made was profitable 71% of the years. And this new feature, which will be in our production soon, will allow you to also filter by the presidential election cycle. In this case, midterm election years we've looked at this last few days. During the midterm election year, this date range right there has been profitable every single year since 1950. Look at this. I would say this is pretty good seasonality, and chances are it's going to continue and do it again. Last time this failed was 1946, and when it failed, it dropped 3.48%. In 1938, when it failed, it dropped 15% and 12%. So you even know for last 94 years, what's the possible negative side of this also? So, given this is proof that markets are seasonally bullish right now. Although when we look at the news and the state of economy, it's hard to believe this, but this is what seasonality is telling us. Is it definitely going to be profitable? I don't know, but the probability is high that it's going to be profitable for the 2022 date range. Let's look at NASDAQ. NASDAQ, do you see? There's this very nice up move. This is just looking at the last 10 years. If we just look at all of our data, 36 years, it's also pretty much up. It's been profitable 67% of the years. Although we have a lot less data for NASDAQ, we can still look at midterm election years and see that for the next 20 days, it actually doesn't make much of a difference. However, if we do like S&P 500, 211 days, let's look at that. NASDAQ has also been profitable since 1986 for every midterm election year for the same date range as S&P 500 did. 2018 it made 5%, 6%, 4%. I mean, the overall average is 21.52% because of these years that it just, look at that, 1990 made 48%. 98 made 46%. So if it's super bullish, it's going to fly. If it's not super bullish, it has been less. Okay, let's take a look at top of our contenders. Visa is now on the top of the list because Sharpe ratio has jumped to 1.48. It made money last 10 years. It just made 0.3%. in 2021, it probably dropped sharply. Let's click it and see. It was very volatile that year. Look at that. This is in 2021, very volatile. However, it was able to get a gain. So if somebody was going for, let's find out if we click on MFE, it went up all the way as high as 10.4% before dropping. So if, for example, you had a sell at 8% or 10%, or maybe sell half of it, half of your positions, you were able to get a much higher gain in 2021. United Healthcare didn't work in 2018, but it worked the other 9 years. That's a 229 day. Now these are short ones. McDonald's, 21 days, failed last year but made money the other 9. Intel, IBM, and so on. Oh, this is a cool thing to look at. When we look at IBM, so let's see, this is a 104-day date range. IBM, we have a lot of data, so we can look at midterm election years. It's been positive every single year. The least money that was made was in 1994 and 2014. They were both less than 1%, but they were positive. Let's go to NASDAQ. Top of the list is still T-Mobile. Has a pretty decent Sharpe ratio. S&P 500. Top of the list is Motorola Solutions. Pretty decent Sharpe ratio here too. 21 days. It has made quite decent percentage. It's the average was 3%. It's a very low average profit. However, it's in only across 3 weeks. And it's been 10 of the last 10 years. We have 37 years. But it wasn't very good the other years. Look at that. Didn't work in 2010. 2007 through 2010. Percent profitable, 65%. Can we look at midterm election years for it? Yeah, it doesn't really make much of a difference. Still 67% profitable, even during midterm election years. Russell 1000, top of the list is Lennox International. Very good Sharpe ratio, 3.83. That's pretty good. And then Motorola Solutions is second for Russell. And Wilshire is Lennox International again, but the second on the list is Helen of Troy Ltd. I've never heard of this, but it sure looks pretty solid. Okay, let's look at ETFs. Top of the list, U.S. home construction. Yeah, I'm just kind of worried about them. Look, there's a drop over here coming up. I don't know how it's gonna perform because things, I would say home construction has a lot to do with interest rates, and that's been going up. So look at that. It has been going up since mid-October. So I just changed the start date to mid-October and kept the end date the same place. And now we can see that 2022, if you would have gotten into this in middle of October, October 14th, you would have been seeing a 4.66% gain right now. Okay, our first down, Australia iShares, is for next 5 days. It's a decent Sharpe ratio down. It's a pretty good Sharp ratio for only 5 days. Very consistent. Why it's dropping, I don't know. But Sharp ratio for when the number of days is very low is not always this high. The next semiconductor ETF. These are longs. Let's look at this one. Vanek Oil Services. They are on a down path, but oil's doing pretty decently. So let's see what happens if we change the start date to middle of October. See? It's gone up 27%. This is not a good short this year. This is not following the seasonality. All right, that's it for today.